This is general information and not advice. Please speak to a licensed finance professional about your circumstances. Stanford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.au.
Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying, selling and renting real estate in Ipswich and the surrounding areas. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. I'm joined today by Steve Beach from Stanford Financial. Obviously, Steve's a great friend of the show. We see him every single month. And I guess the reason we're seeing him today, welcome Steve too, by the way.
Thank you.
The reason we're seeing him today is we're talking Reserve Bank of Australia announcement with the official interest rates and what's happening. So without any further ado, Stephen, what's happened?
So as we predicted, they have put rates on pause again. So I guess a big thing that came out of it was, if you probably asked a lot of economists and even particularly banks last week what their prediction was for today, was a lot of people were actually still predicting rate rise. I guess the RBA did make a few announcements in regards to the fact that, inflation is still sticky is the topical word that they keep using all the time, just meaning that we're not seeing much trend either downwards or upwards. So it's fairly plateau. So the inflationary rate went from 4% last quarter to 3.8%. So it is heading back down, but it was
That's good that we're going down.
Was 3.6% 3 months ago or 5 months ago. So, but it definitely they've pushed out a lot of their forecasts to get to target inflation, which is between 2 and 3%. They've now sort of pushed their forecast to 2026 before we're anticipating meeting that sort of.
Seems a long like away, doesn't
that
it? 2 to
does.
3% seems like that's like a marathon away. All right, so the good news is we were right. Interest rates are on hold. That's the official term that the banks like to use. So I guess now we start to look at why. Why didn't they go up? Why didn't they go down? What's the major reasons? What's the I guess the things that are impacting on the Reserve Bank's mind in terms of why they've kept it on hold?
I guess unemployment's currently sitting at 4% with an anticipated of 4.5%. So that's still sitting fairly, I wouldn't say high, but in line with a lot of their predictions.
And we've talked about this before. They actually want unemployment to go up.
Increase, yep. So which in turn also pushes up productivity. So if you can have, 10 employees working at 80% versus 8 employees working at 100%, you're basically going to get the same result. So if people are working a bit harder, that means, there's potential for more wage growth, so we can actually pay people more money, because the more employees that we have, the less money that goes around, and it essentially, puts pressure on inflation.
Okay.
A couple of things that were interesting, which everyone probably feeling the pinch. Insurance inflation was quite high. It was probably one of the highest it's been for a while. Usual rent inflation, education, health is all still sitting pretty high.
All the normal suspects.
One of the things that they did talk a little bit about was the latest budget, which is what I guess a lot of people were probably scared of, was what were consumers going to spend during end of financial year sales. So recreational spending probably was a lot softer than of previous years. I think there is just a lot less cash flow going around. But I guess moving forward now with some of the rate cuts that have come into, or tax cuts, I should say, that have come into effect now, with people getting a little bit more in their pocket each week. Which has been good.
So what they're saying, in sales, they spent less than they thought that the population spent less. Isn't it funny though, when you go out for dinner, I don't know, like everyone goes out to dinner occasionally, there's a lot of people out. Like, they talk about all these inflationary pressures, but if you go out for dinner or something like that, or go out for a drink, there's plenty of people out. So it's sort of weird, isn't it? In an environment where they're saying cost of living's high, no one's got any discretionary income, but it doesn't sort of always translate into the pubs and clubs around the place.
Well, alcohol and tobacco inflation was still quite high.
There it is.
We don't like talking about that one. That one.
We are in the land down under. We don't mind a drink, a durry, a feed, a bet.
That's it.
All right. So, mate, I guess with all the things that are happening, we've obviously, since we met last, there was an attempted assassination on
Trump,
Donald Trump.
Yep.
Very sad. That's not any sort of laughing matter. but there's obviously all that uncertainty that's going on in the American economy. We're heading towards an election here in Australia. Like, what's the average punter thinking? What sort of effects is it going to have? We've just seen massive turmoil on the stock market.
Yeah. There's a lot of, I guess, influences externally to Australia that influence a lot of these decision making as well. I guess the election that's coming up in America with Trump and Biden pulling out. So there's I guess uncertainty in those sort of massive economies. So like we talk about our economy and we're probably like 2% or 1% of what the American economy is, sort of thing. So we're not even a drop in the bucket.
We win a lot of gold medals, though, don't we? Really? Wish our economy was based on the Olympics.
That would be good, definitely. So, so the uncertainty that's outside there, there's still, political unrest, what's happening over in the Middle East. But all these factors are going to come into consideration. We've held now for, I think it's 11 months. It was November was the last, rate movement, which was up. So with those sort of factors, we've been on pause or hold for a while now, essentially starts to give a bit more stability in an Australian economy, so which is ultimately a positive direction.
All right, so hopefully there's some hope of stability. I guess it comes down to prediction time. What's going to happen? The Reserve Bank meets again in August. So it's only
September. Yep.
Is it September? Oh, we're in
August already.
Oh, of course. Sorry, my bad. I got so excited about the July, record results. I forgot what month it was. So we're in August. So we meet again in September. So what's going to happen to rates in September?
I guess if you're looking at a lot of the bank forecasting and a lot of economist forecasting, a lot of them have gone away from rate rises, which is great. So that's positive news. We're back starting to talk about when's the potential for a rate cut here in Australia, so which is going to be positive news. We've got sort of two out of the major banks are predicting this side of 2025. So two of them predicting November for the first rate cut in Australia, and the other two are sort of predicting sort of February and May. Myself personally, I think I've been sort of talking about February or November. Would we see one this side of Christmas or would we see it sort of straight after Christmas? I thought if they lifted rates, we would 100% see a rate cut beforehand. But myself personally, for the, September rate announcement, I'm still calling it for a hold.
Look, I'm going to agree with you. I think it's a hold as well. I really wish we would get a cut. I think it would be a massive stimulus to the market. I think it would be a breath of fresh air to mortgage holders who are generally feeling the pinch with cost of living pressures. Because like I said, the fundamental problem is that education, health, all those sorts of things, they're not getting any cheaper. They continue to get more and more expensive. So it would be nice to get a reprieve somewhere along the line. Obviously, sadly, we don't think it will happen in September. And when do they meet again after September?
So the next meeting would be then November.
So then that's when we're really hoping maybe a rate cut.
Yep. So two more announcements. We're only talking one announcement we think hold, and then the following announcement, fingers crossed, we see a rate cut, which will relieve a lot of pressure on.
Look, I agree. So obviously to everyone out there, for September, we're both tipping. The two Steves are both tipping on hold for September. And we're both, at this point in time, both praying, fingers crossed, toes crossed, the whole lot, hoping for a rate reduction in November. So what we'll have to do is, unfortunately, we've all got to stay tuned. Mate, on that note, thank you so much. Obviously, always a pleasure to be joined by Steve Beach from Stanford Financial, an absolute wealth of knowledge. Guys, if you'd like more information on what we've talked about today, please click the link below. If you've got any comments, any questions, we'd love to hear them from you. What you've got to say to us is extremely valuable and we'd love to hear from you. Once again, I'm Steve Athanates. I'm from NG Real Estate Ipswich. If you'd like to see more of On the Couch with Steve, join us for the next podcast.